Hello everyone. Welcome to our beginner's guide to investing. If you've ever wondered how to make your money grow but weren't sure where to start, you're in the right place. Today we'll cover 4 popular investment options: bonds, fixed deposits, FDs, stocks, and mutual funds. We'll also talk about how to choose the right option for your goals and provide some handy tips for getting started. Let's dive in. Let's start with bonds. A bond is essentially a loan you give to a government or a company. In return, they pay you regular interest and repay the principal amount after a set period. Bonds are considered low-risk investments, making them ideal for conservative investors or those seeking steady income. For example, government bonds are among the safest since they're backed by the government. Corporate bonds, on the other hand, might offer higher returns but come with slightly higher risk. Did you know there are also bond funds? These are mutual funds that invest in a variety of bonds, offering diversification within the bond market itself. Before investing in bonds, check the credit rating of the issuer. Higher-rated bonds are safer, while lower-rated bonds might offer higher returns but come with added risk. Now let's talk about stocks, a favorite for those seeking high growth potential. When you buy a stock, you're buying ownership in a company. If the company does well, its stock value rises, and you can sell it for a profit. You may also earn dividends if the company shares its profits. But here's the catch: stocks are high-risk investments. Prices can fluctuate wildly due to market conditions. If you're a beginner, it's important to do your research or consult an advisor before investing in individual stocks. To make it easier, you can start with blue-chip stocks. These are shares of well-established and financially sound companies with a history of steady growth. Another tip: start small. Begin with a modest amount that you can afford to lose, and gradually increase your investment as you gain confidence and knowledge. Consider using tools like stock screeners to analyze potential investments. Finally, we have mutual funds. These are investment vehicles that pool money from many investors to invest in a diversified portfolio of stocks, bonds, or other assets. They're managed by professional fund managers who make investment decisions on your behalf. Mutual funds are a great choice for beginners because they offer diversification and reduce risk compared to investing in individual stocks. There are various types of mutual funds to suit different goals. Equity funds focus on stocks for higher returns but come with higher risk. Debt funds invest in bonds and fixed income instruments, offering stability and lower risk. Hybrid funds, a mix of equity and debt, providing a balanced risk-return profile. Many mutual funds allow systematic investment plans, SIPs, where you invest a fixed amount monthly. This approach not only makes investing affordable, but also helps in averaging out market fluctuations over time. With so many options, how do you decide what's right for you? Start by asking yourself these questions. What is your investment goal? Are you saving for a short-term need, like a vacation, or a long-term goal, like retirement? How much risk are you comfortable taking? Are you okay with market fluctuations, or do you prefer stable returns? How soon will you need the money? This determines your investment horizon. For instance, if you're saving for a long-term goal and can handle risk, stocks or equity mutual funds might be ideal. If you're risk-averse and need stability, consider FDs or bonds. Here are a few additional tips to help you start your investment journey. Educate yourself. Take time to learn the basics of investing and the options available. Start early. The earlier you invest, the more time your money has to grow through the power of compounding. Diversify. Don't put all your eggs in one basket. Spread your investments across different asset classes to reduce risk. Track performance. Regularly review your investments and make adjustments as needed to stay aligned with your goals. Stay disciplined. Avoid emotional decisions based on market highs and lows. Stick to your plan. And there you have it, a detailed look at 4 beginner-friendly investment options: bonds, fixed deposits, stocks, and mutual funds. Remember, every investment comes with its own risk and reward. The key is to assess your financial goals, risk tolerance, and time horizon before making any decisions. If you found this guide helpful, Don't forget to like, share, and subscribe for more tips on personal finance and investing. Also, let us know in the comments what topics you'd like us to cover next. Until next time, happy investing.